Well, it is surprising. I mean, we have a really good story on CNBC.com about it. I've got it. We say lob a grenade and decrease the competitive world of retail investing. I'm also thinking about the Fidelity, what their pricing is for index funds. It looks like that the gross margins have to be coming down, David, especially because of your credit balance.
Mike Santoli points out that back in early 2017, Fidelity cut retail commissions by 40%, and many of these stocks did the same thing we're seeing here. But over time, as is typical, they came back. It's about assets. It's not necessarily about trades, and whether you're charging $8 for a $10,000 trade or nothing wouldn't necessarily seem to change somebody's opinion and/or decision.
Well, I don't know
about whether to. You don't know.
Well, because millennials
who's trading 100 times a year.
Millennials.
Who are these people trading 100 times a year?
Fools. Millennials. This is targeting millennials, David. Now, remember, when we see millennials and what they're targeting, it's usually people who are in their 60s deciding what the millennials want. David, the millennials want pizza delivered, and they want video games, and they don't want to leave their couch unless they want to go buy frozen food in the supermarket aisle. That's what they want, not cheap trading.
All right,
David, they want Call of Duty. All right, that's what they want. They don't want anything else.
Turn it into a stock market trading game. Maybe they'd like that.
It's so hard to do, and the feds don't like that.
They don't like that.
No, feds don't like that. David, millennials just want to text each other, never talk to each other, and send things by Venmo. So there can be little emojis saying, "I really like this restaurant." The
point being what? That this effort's not going to work?
No, it's a price war. Everyone's got that price war. That's what I think about.
Listen, I think it's something.
And JP Morgan, JP Morgan should not be the discounter. JP Morgan is considered to be supreme.
It is worth noting. I mean, Charles Schwab's market value is $70 billion. It's not as though they've been sort of making missteps.
I remember when Goldman
may be a little bit weaker of late, but
do you remember when Goldman was considering to buy them?
Yeah,
how about like that? In order to be able to participate in the dot-com era, which they didn't do. They did make an acquisition that wasn't so good. Spirit Leads.
Which one are you?
Spirit Leads.
Oh, yes,
now, since then, they haven't been really that acquisitive. I think they need to make an acquisition. I think they need to be able to raise their price-to-earnings multiple, and they need to be something that's more visible in fintech. Because anything, look at Square.
You don't like Marcus? You don't like their effort sort of at
Marcus?
At small.
You ever see anybody who says, "Listen, I got a loan from Marcus"? Now you'd say, "Well, Jim, that's because you're a rich person, and you know."
For that is helpful to people who can potentially get it to take out their credit card balances.
Square has the best loan process because they see your receipts. Now, look, Marcus could be blown out. Some might blow out Marcus, make it bigger, but right now it's niche. It's a niche business. It's not moving the needle. Look, do I like it? Of course I like it. But it's niche.
It's not something.
And we don't like niche. Like SodaStream is niche.
Back to this brokerage question. You and I were talking earlier, though, and you were talking about balances and what you get paid on.
Well, that's what I care about. If you have a low credit balance, if JP Morgan doesn't pay a lot on that, and they get to the assets, that's fantastic. If you go, Bank of America, Merrill's got really high rates. So I mean, I don't know. You got like CD, like rates. So
that's
think about it.
Right.